Hello guys and girls, above average Joey here, and today I'm going to be introducing the 60-minute model, alright, with a live example of an execution that I took this week. So let's begin here on the 60-minute chart of Nasdaq. Really this is just where I start to get reference points, alright, so as we can see here, this is a 50-50 bias, whether it's going up here or down here. But with this model, even though it is optimal to have a strong bias, a bias is not needed. So when we were up here trading in this run lower, all this price action along here didn't exist, okay? So just imagine it's not there right now. Well, if we look back from here, what reference points do we have in this market maker sell model and market maker buy model? Well, we've got these engineered equal highs up here. We've taken this previous day high and engineered a new high up here in close proximity to these equal highs. So there's even more liquidity up here. We've got this sell stop down here, which was the Asian session low. We've got this fair value gap, this order block, and then ultimately this new week opening gap, which resided in a discount of this range. So when we're here, I don't really know where we're targeting at this point, okay? We've just taken the buy stops here, so I honestly expected us to take the sell stops and then run higher. How far we're going to go down, I'm not sure. We're going to just touch it and then rally higher, or we're going to retrace deeper into the NWOG and then rally higher at a later time. But this is where intermarket relations come into play. So when we came down here, yes, I was expecting this low to be ran and then a potential run higher. But this low wasn't ran, yet I still caught this run higher. So how did I do that? Well, I looked at this top chart here, being ES. As we can see, when we ran down lower, again, we just created equal lows here, and we didn't run these stops. But if we look at this lower chart, which is YM, we can see that at this time here, where we made a higher low to these lows, and a slightly higher low to these lows as well, YM did, however, sweep these lows. So this is an SMT divergence, which gave me a confluence considering the time and price we were in and at to look for higher prices. So now if I jump on to the 1 minute chart, this is just some further insight on how to analyze time and the liquidity for this. So between 2 to 7 here, we have our London range session. We've engineered highs up here, we've engineered lows down here, okay? Now 7 to 9:30 in the pre-market session, we've created another high below these highs up here, and we've run off lower, taking out the London session low and creating this low here. Started rallying, we've created a lower high than this high, which is still a lower high than these highs, and then at 9:30 equities open, we start running lower, okay? Then in the 1 hour window of 9:30 to 10:30, we actually take these lows. Now, again, we make a higher low than this low, right? So what do I mean by take these lows? Well, if we were to refer to intermarket relations again, this low here was actually swept on one of the other indices, and then this short-term low here was actually swept on Nasdaq but wasn't swept on the other indices. So this is several confirmations in a fractal order of SMT divergences, which are giving me more confluence to this idea. SMT is not the significant thing that I'm talking about here in this model, okay? It's just very helpful for these insights of why we didn't get these liquidity sweeps. But really, what am I looking at here? Well, it's 9:30, okay? We've swept this sell side, we've swept this sell side, and like ICT likes to say, smooth edges like to be made jagged, okay? So if all this price action is already jagged, where would the likely draw to attack the most liquidity be? The upside, alright? Because we've got this high, these highs. All this liquidity has been engineered here, and then once we take this low, we're now triggering breakout traders above these highs. We take this low again, breakout traders. We take these lows with the SMT, more breakout traders, so more and more stops are being piled up here. at this point down here, what do we have? Okay, we've got a bunch of liquidity resting at these equal highs that would likely be made jagged. We've seen numerous runs on time-based sell-side liquidity, London low, pre-session low, pre-market low, and now we're in this 9:30 to 10:30 hour where we've seen 9:30 open and start trading off lower in a protractionary state, and the low has been made around this macro time. Plus we have SMT divergences, which are giving us strong confluence that these are strong stop rates that are likely to be protected. Now all we need is a change in the state of delivery to get in sync with the buy program aiming towards these draws up here. But this now is a regular trading hour chart rather than an electronic trading hour chart. And at 9:30 I just like to switch to the regular trading hour chart and get further reference points, as it just gives greater details. Now this isn't a necessity, but when trading index futures, I think it's just a lot better as you have more information to work off. So unless you feel analysis paralysis from it, I see it doing nothing but a benefit. So if we look at this regular trading hour chart, the first thing I do is I like to highlight the regular trading hour gap. Okay, so this is from the previous day's close to the 9:30 open, and this separation I've drawn out with fib levels. But from here we can also see that from 9:30 we created this high, above this high, started retracing. We were still bullish as we were above this regular trading hour gap. We engineered more buy side here, and then we ran off lower below this regular trading hour sell side liquidity, and we actually ran also into this little inefficiency here, and then that is when we start moving higher. Alright, trading above this regular trading hour gap, using it as support, trading above it again, using its high as support one more time, and then trading off. So now just going into the final slide, really just giving the whole picture back on the electronic trading hours chart. This fib level here still delineating this regular trading hour gap right here. So we've got our draws up here, we've swept liquidity in the form of London lows, we have 9:30 open, we've started retracing in this protractionary state, we have this SMT with the pre-market session and this lower time frame SMT during the 1 hour from 9:30 to 10:30, which the significance of this hour for this model, by the way, is this is not when the whole trade should complete. As we can see, the trade completed closer to 11 o'clock, but this is the hour where you expect this manipulation to happen and you look for the reversal. So then also we've got it in this macro time, which macros usually either cause the expansion or create the high or the low. So then, as I said, all we need is that change in the state of delivery, alright? Which, yes, I use this regular trading hour gap, but if we're just looking back over everything, we can start with this inversion fair value gap here. Once we trade above it here, is its midpoint. We can enter off that CE. Of course, we traded up to the first presented fair value gap and traded back to the midpoint of this regular trading hour gap. Used that as support, traded off, as I showed before, we traded into this little fair value gap, the top of the regular trading hour gap, also this order block, and then also this first presented fair value gap, which, as I like to usually add and highlight the regular trading hour gap, which again is this gap here from yesterday's close to the current day's 9:30 open, I also like to look for the first presented fair value gaps, okay, which is the first fair value gap that forms after 9:30 that is above 10 handles. Now, as we've gone above that, I also demand for this to hold support, alright? So here could be another entry, and then usually once we've come out of this 10:30 time period is where I like to stop my entries. This 9:30 to 10:30 hour is really just where I look for the manipulation and like to see my entries come in. But the latest to get in sync would be the 10:50 to 11:10 macro. But here we can just see that after 10:30 we just start showing support to all these order blocks, rallying away, showing support to the order blocks, coming above this minor buy side from 9:30, which is where I took my first partial and rolled my stop to break even. And then again, just coming back into this down close candle and rallying higher, little gap here, little gaps up here that we're trading into, and then we traded above the buy side, which was the London high as my target, okay? And that is where I exited my full position. So really that is all I have for you today, guys. This is just an introduction to the model, the basics of the model, kind of just talking over the execution I took using this model. In the future, I will give further details on this model and more examples. Take care, guys, and peace.